Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, September 10th. Michael Boutros with you this morning. Great to be here. Peter, Mark, Aurelian, great to see you all in the room. So we got both Pete's here today. SPX is on the list, Pete. We're going to jump through real quick. We got the DXY, Euro, Dollar Swiss, Kiwi, Dollar CAD, all the setups from yesterday still holding critical levels. Sterling, Aussie, and gold. Gold finally breaking near-term support, heading into the 1490 range, looking good. SPX, Pete, we broke through that key resistance we were talking about in the webinar, and that we highlighted on Sunday actually, but it didn't last, right? So I'm looking to see this pullback, how deep we get. Still looking for a deeper pullback, and then we'll circle back and hit dollar yen from the last 3 updates ago. Any other questions? As always, feel free to throw them on the message board at any time. So a quick look, I don't think we need to spend much time in this in the DXY. I think all of you were in the webinar yesterday on the free side for daily effects. It's just been clockwork, okay? Where we closed, the parallel that held the extreme, the pullback, we're just sitting in a real tight range. The weekly chart has nothing to look at. Watch that trigger into the close. Here's the DXY and the daily. So we're hovering right around last month's high day reversal close, which was the fresh yearly high until this one. Just an interesting pivot range I'm looking at. Here's what the scalp looks like. No change from the previous night. So here's what it looks like on Sunday. We opened, this drop here, by the way, guys, is debatable. It doesn't show up on all platforms as it happened after the close of US markets. Actually, it's actually, if you look at the like a 10-minute chart, you can see that it's actually, time period after 5 p.m. So I'm not sure what's up with that. In any event, where it even gapped into, where it dropped into, certainly a big spot, right? So zooming it back out, we opened the week here, pulled a little back. We're just setting a weekly opening range. Same levels, okay? Same levels. 98.60 near-term resistance. If you get through that, you're looking to challenge the monthly open and 98.94. This is bearish inval. Anything the dollar does on the upside, if it were to break, not our favorite scenario, but if it were, that's kind of the extreme that needs to hold for this to still have some merit, as a large return in price. So not much to update here. Euro obviously giving us the same type of kickback, but Euro, we're looking for the draw lower. And that's why I premise this, guys, by saying, if this does break higher, hey, man, great to see you in the room. If it does break higher, don't want to get too aggressive. Don't want to be surprised, right? Because Euro has a little room to go, in my opinion. So any questions on this before we move off? You don't really have any major US data of significance this week until you get a little bit deeper. We have those CPI numbers, which are on tap on Thursday. And then we got the retail sales data, which hits on Friday. But, maybe trade talks. We can go over the million of scenarios of what could be. At the end of the day, look for this near-term consolidation break. Now, again, it depends how granular you want to get on this, but if we do get a little deeper, discounting that low, you could see a near-term consolidation argument being made, right? In which case, if it breaks down, you could get that last washout towards 698, that's 618 retracement, maybe even the lower parallel, and then get a larger recovery in price. Still ultimately looking lower, right? I think we're looking for validation that this was something a little bit more significant. But this could go both ways. So I'd rather just keep the attention on the majors, using this as a barometer if we do finally get the washout. Here's what Euro looked like last night. So this slope worked out great until this, okay, because the breakout really stalled at the same level. Here was Euro, the previous update. This is from last week. And we were just coming into the top of this lower pitchfork formation. We talked about the reversal candle that it posted there, the severity of that draw. And the risk was for a little bit of a deeper washout before getting the breakout. So we got the deeper washout, then we got the breakout, but we're not getting much follow through. Here's euro now. The breakout failed again at the same target from last week. That's 110.66, the target that we had eyed. Here's what it looked like last night. Came right into that target, pulled off. You know, our ideal scenario, guys, is we're looking for long entries lower down. The levels to look for, you know, 1025 is something I'm targeting now, but it's not something I'd necessarily want to just try to jump into the long right off the bat. If we get a really strong reaction, you got to stop against the weekly opening range low. It's really objective and it's really tight, right? Um, that's my kind of trading. I'm more inclined to think if it does wash out, um, you know, you see a larger drawdown, maybe towards the monthly, weekly open. This is last week's open. That's why it says weekly open, but we'll put this as the September open. Okay, so that converges on slope, and just lower is the 618, the entire advance off the low. So the September range thus far. Good spot, right? Good spot near 109.86, 109.90s, the top end of that range. Again, don't know if we do it. Right now, I'm just looking for an objective break of the weekly opening range. Weekly opening support comes in at 110.25 initially on this drawdown. So no change to those levels. We did sink deeper. You know, we're down like 10 pips, 12 pips from yesterday, whatever. We're still looking, see if we can't get a washout of sorts before this thing makes another run towards the high. And that would give the dollar the little bit of a breather it needs, maybe for a little bit of a pop before it reverses. So that's my thoughts on euro. Now, obviously, we have the ECB on tap on Thursday. That's the big player for euro this week. While there's no necessary change expected per se to the interest rates, it's kind of that, again, Mario Draghi moment where things are getting tough, right? Definitely signs of economic slowing all over Europe in general. And with this trade debacle and all this stuff kind of looming over, you got the UK's Brexit still kind of completely up in the air of how that's going to actually go down. So we'll see if there's any commentary. At the end of the day, you know, I don't really care. I'm looking at this euro drop. If it does drop, look for 109.90. If it pops through, if you get a clear weekly opening range break to the upside, all good, right? The big level for us all throughout last week was right here, 111.07 to 111.12. Now that takes it above this slope. I don't know how much emphasis I want to put, how much reliance I want to put on this slope. It's been pretty decent on a couple of pivots, but it's getting kind of messy. So still focus on this lateral level of inflection. Very, very clear. You got multiple pivots off this. It's a 38.2 of the entire drop, okay, from the June high. And it's also the swing low that you made back here in May. So really nice zone of inflection. Look a little higher. That's 111.07, 111.12. I just feel like after this rip, you kind of need another washout before before heading higher, but we'll see. Questions on euro? All right, that is number 2. Number 3, dollar Swiss. Haven't talked about this for a while, but we're right back at resistance. So recall dollar Swiss. This was a beautiful play for us. We made a massive outside day reversal right off the 100% extension, just pips away on the 3rd of the month there. Shifted the focus lower, clearly. Now the drop really fizzled out, you know, really fizzled out. Didn't even make a 50% retracement. Wasn't slope there. Kind of didn't have it going. Turned right back around, popped back through the objective yearly open, and just ripped right back to the highs again. This is the 100% extension at 99.30. It's still the same level, and that held as resistance. We were testing that last night. So, man, it's either and this it's kind of the same setup. Here it is. Let me just bring it up from last night. It's either a short off of that 100 or a short off the 50. 99 52, 99.48, this zone. So if that was it, kind of ticked off because I definitely missed it. But with where we are in the month and week, just watch out. Watch for this recoup. If the dollar does pull higher, you'd expect to see that 99.50 tag at least. So I'm interested to see what happens here. At the end of the day, we simply went into uptrend resistance and bounced off again. So same thing we did here, which led to a larger decline. Same thing we did here, which was not even, a single day decline. Seems that every pullback is getting more shallower. So look for support along that slope. It matches up pretty nicely with that swing low we made in US trade yesterday. Let's call it 98.87, 98.88. Weekly open is 98.75. If we get that break, it's right back to the yearly open, in my opinion. This thing is just a really nice pivot in price. Again, support, break, acceleration, bounce right off of, resistance, consolidation, breakthrough, acceleration, resistance, acceleration, acceleration, acceleration. If we get through that, one other thing, let's say you're not looking at this pitchfork, something like this, it puts that right there too. So it's either 99.30 or 99.50. Anything higher, and you're looking for, another leg higher in the breakout for dollar Swiss, and that would take you towards like slope resistance, the highs from August, um, just below parity. Here's dollar Swiss, by the way, on the weekly chart. All right, there's cause for us to be looking lower. This kickback last week obviously failed, but here we are again. Oops. Momentum right at 50. It's now or never. So an interesting setup in Swissy, still on the menu. I haven't really gotten into it, but still on the menu. All right, that is number 3. Now, we haven't covered Kiwi in some time, so I was kind of excited to get through the weeds and redo, kind of rework the levels from this one. We haven't talked about this since last month. The drop on the weekly chart, huge inflection point, a huge level that we were looking at was that 2016 low. It was the the 618 extension of the decline. Really nice spot. There was slope there. What the heck was that? Sailed right through it, came right back through it. I just put this thing on the side and shelved it. But things are starting to get a bit clearer, especially with the turn that we're seeing in the broader commodity block in general. Here's Kiwi. This is what I'm talking about. The outside weekly reversal, sure, shifts your focus higher, but not on the immediate front per se. And it did defend a pretty big region that we were looking at. So the level in focus was, again, 63.43, 63.47. Just a nice, a nice inflection point with slope. Once we broke through that, it looked like you wanted to see that drop towards 62.30s, the lower parallel, let's say. Didn't really work. And then it popped right back on a reversal. We're now checking as resistance last year's low, which is 64.24. We're literally trading just below that now. So I don't think this thing is out of the weeds or out of the woods just yet, but I also do like how it turned. So I'm going to continue to favor the broader upside. I just think, like I said last night, from here, you need a more favorable position to actually try to trade on. And this slope isn't like crazy amazing. If I just eye it out with resistance, just draw parallel off the highs, looks like it came right there. So I'm not one to really like just playing with this slope per se, but we could just drop this pitchfork altogether and use just parallels and give us the same type of response. So let's see how this pans out. But here's what the daily and intraday charts, those look cleaner. Here's the daily chart for Kiwi, reworked from last night. And here's what it looked like on last night's chart. Same thing. So you're essentially looking at a pitchfork here. Again, some poetic license taken here, if you may, but it worked out really well. The lower parallel caught this. You saw breaks on the 25% line with accelerated drop, accelerated breakthrough. The median line converges on a basic 38.2 of the entire drop from July. The lows from June and the lows from May both converge on this zone right here. It's like 64, 68, 64, 95. Nice little 20, 30 pip range there. It's had a 6-day advance. It's another thing that we noted last night. Look back doesn't see that that's like all that rare. In fact, we had one not too long ago, right over here, which was much greater. It was like a 10-day advance. Nonetheless, same type of, we're talking about the same type of conditions at least. That market has been on a stretch. We're coming into some resistance. Might be a little bit of a kickback before we start to continue higher. That's the daily chart. Here's the intraday. Here's where things get interesting. Here's what it looked like last night. So the level that would be a little bit more of a reversal type of play for a larger type of correction that you'd expect to be like 64, 68. There's all kinds of parallels there. If this upslope, which we don't have much conviction on, again, it's way too early, but at least on the initial touch, you see a breach, test of that 25% line support, test of support, a little messy on the median line, but there's the break and the acceleration. The weekly open comes in with the weekly opening range lows near 64.14, 64.12. And you're setting up for a nice little range break here. If you downside break, you'd look for the correction. At that point, throw on a retracement here, see where it converges on this slope. But some soft targets just for the view would have us looking for re-entries for a long position from down there. Okay, it's just exhausted in my opinion. You've been getting 3 points, or at least the last 2 points. We're getting divergence right here as this thing pushed into a new high, higher high. Oscillator made a much more subtle high. There's the move lower. You can have a pitch support trigger here, which looks like it's broken already. So, I'm looking for, again, the washout, again, maybe the dollar balance, and then opportunity to push this back higher through 64, 68. It's been a while since we got involved with Kiwi, but I'm starting to warm up to it. Starting to warm up to it. Clear on Kiwi data for the rest of the week too, so there's not much to pay attention to there. All right, dollar CAD, number 5. We've been all over this one. Here is what Loonie looks like. So it's the first major support hurdle. And if you get a theme of today's webinar, it's kind of like we're reaching inflection on all the majors, essentially, literally. Where you could see a little bit of recovery, but if we do get it, we'll use that opportunity for our favor. If it breaks and continues through these levels, well, we should, gung-ho, right back on the horse. Let's go. Here's dollar CAD on the weekly chart. It all starts with this. Sweet, sweet, sweet weekly reversal off a huge area. It's 33.55, 33.70. We've talked about it for a while. 618 retracement, a decline off the highs that we made in May. It is the 2019 high week close, the first week that we closed the year, and just a beautiful range. We tried to test that level literally for like 4 weeks till we finally did it last week and then collapsed horribly. We opened at the 618 retracement. That's 31.55. It's the support level we are still focused on at this point. And like I said, it's the first support hurdle on this sort of resumption trade, if it is, in dollar CAD. So the weekly chart, last week's candle, really ominous, right? Here's what it looks like on the daily chart. Yep. There's a reversal. Couldn't make a daily close above it. Same support zone. Again, I wanted to remind everyone that last month's opening range never broke, which puts it in focus into the subsequent month. That basically looks at this zone here between 31.80s and like 33.45. Never cleared it. So on this drop, okay, into the close of last week, it pushed through and it closed below. But this is still support. It's still a lateral level of support. It's still the inflection zone. It's the opening range highs from July, which broke, were tested as support and accelerated to the new high. And it's just a huge inflection range. Yesterday, you saw us drive right into it and get a little bit of bounce. I still think the risk is for some bounce here until we get and push through this. I love dollar CAD lower. That's the problem, is that we've loved dollar CAD lower this whole godforsaken month where we didn't get any moves. So now that it happened all in a 4-day span, just on a huge, massive drop, you want to pick and choose your entries. I don't want to get caught in a short position at the low or into support. So I want to see some sort of conviction. Now, here's what the near-term chart looks like. If we get at least a tag of downslope support, I would have thought it prudent. We didn't really get all the way in there, and we tagged that swing low from last week. Here's the tag, and here's the move lower. We're still within the weekly opening range. At this point, we're trading just fractionally lower on the week. The July opening range high, that level we just talked about at 31.45, now converges again on this near-term downslope from just the most recent high, low, high. Lower parallel support, a little messy yesterday trying to get through this. There's the bounce. Even if we drop here again, watch out. Okay, that's kind of the acceleration break. If we see this break, it should accelerate. That being said, the immediate downside bias, you want to watch it while above this. So if we get a recoil, again, I'll tack on a quick retracement, and once we have confirmation this is a low, and maybe a tag of just the median line, and then we get back onto the short side, or even the 25% line. I mean, we didn't even get that. So sometimes if you get too stubborn with these and you really get you miss opportunities. So don't listen to me on that front. I'm just highlighting the key levels that we need to work. Go with your conviction on the momentum trade. Questions on dollar CAD? All right, moving right along. Sterling, number 6. So British pound looks like that. So no change to any levels from yesterday, by the way, on dollar CAD. We're tried to make it through the August low, failure here. I don't know if I'm willing to, call that a turn yet per se, but look for a drop towards support and reaction down here. Below 31.45, resumptive move, right? Resumptive move. 30.94 would be your first target, like just right below the 31 handle. So it's a nice 50 pip move there. Into sterling. Here's pound. So the final target hit yesterday, and it was 123.80. From there, and I think we talked about this in the webinar yesterday and said the same exact thing. I'm still there. From here, it's the same inflection point zone on all the trades. I don't really want to mess with it by trying to play resumption. So I like it. I like sterling higher. That's the broader, in my humble opinion, that's kind of the trade. But can I buy here? Even on this pullback last night, which looked, phenomenal, I suppose. Like, where's your stop? If you're willing to take a stop from 23 figure, or even just above all the way down to 22.20s, that's your prerogative. For swing traders, that maybe might make sense. But even then, you're into resistance, right? We need to get through the upper parallel, which is just higher, to see another accelerated move. You're getting divergence on the last couple of highs. I want a bigger pullback. Same thing with euro. Like, I need a bigger pullback to get back in. So if you're going to play it super nimble and you see something here towards the highs, or we spike into that parallel and again you see some failure, I actually might look to play the fade. Ultimately, we're just wanting a bigger pullback to get long. Very simple. Nothing too fancy here. So the levels are exactly the same. All we did was spike lower, 22, for all intents and purposes, 2250 held. I mean, we spiked just a little bit lower than that, but it was just a heartbeat with momentum holding right at 50. There's the rebound, right? And we're right back at this resistance range again. Boom, boom. again. I still think you get some sort of failure. If it gives you a bigger pullback, we're back in. A breach from here, you're looking for 24.38. The big level, 24.80.25. That's the 2018 low, okay, and a whole 38.2 of the entire drop. That's like a bigger zone of significance for me. You can just see the pivot that we've got here. So first things first, looks like this whole parliamentary suspension thing is Sterling likes it. Who would have thunk it? Questions on pound. We're just like flying through these today. And I get that price action hasn't been that exciting, but we will wait for our entries and we will get them. All right. Let's segue into Aussie, and then we'll hit gold, SPX, and we'll circle back to dollar yen. Or we can hit dollar yen after this. Let me know if you got anyone who's actually trading dollar yen. I think it's still a turtle, in my opinion. Here's Aussie. So this setup has been probably the most boring out of all of them just to start the week because we haven't done jack. The big focus, as I've been talking to you guys about this zone for a long time, since the initial break that we made back here in April, the 2016 low we closed, 2016 low, that sweet spot between 68.27, 68.55. We closed the week there, okay? On the back, was this an outside? I don't think it was an outside low. Yeah, it was on the back of this outside reversal, weekly reversal off the lows. We closed right there. Now we opened the week, we probed a little higher. As I said, the top side break of the near term formation didn't look like it had much more steam for it just to plow through this major pivot as well. So you saw things start to slow down there a little bit. And yesterday, while we did close above, just doesn't have kind of the breakout feel that you'd want to see from a downslope rip like that. So for Aussie, same gig, 68.28, 68.31. That's the sweet spot I want to see a reaction at. If we get deeper than that, look, maybe 60, 68. I don't want to really see it beyond that if this breakout is legit. Again, a trade that's had, what, a 5-day, 6-day advance. It's, momentum's right at 60. Yeah, get a pullback. This would be the spot. You're right at the median line. Here's the daily chart for Aussie dollar. I mean, this thing has just been playing within this like a fiddle. 25 parallel support, 25 parallel support, boom, right into it, outside day reversal. This was the first major pivot. You'd think you'd get something like a kickback into some sort of correction, then a brip. Here we are. We want to test the median line first, fine. Maybe we drop the low we close as support, actually. I'll reassess this tonight, but it might be more prudent, let me just see, to do something like this. Kind of highlight this as the top end of the zone. You got a couple more tails there. I don't like that, but 68, 66. Just watch these levels. Watch these levels. We need to clear the high basically to get the breakout. Next level 69.10. Here's the intraday chart. Near-term support. This gets adjusted to that new high we just made. Maybe a drop towards that towards that 38.2. I'm more focused on this slope than I am about this. I told you guys about this yesterday. This one's kind of, I'm almost ready to kind of just ditch that for now. Here's, if this near-term breakout's legit, getting divergence once again. All the trades seem similar. All the dollar trades seem similar. Divergence into a near-term high, a little bit of a consolidation. If you get a whipsaw lower right now from here, you kind of want to fade it. But the same thing, if you stretch higher, then you're coming to the first primary targets um, for these reversals. So there's, as I said yesterday, there's a lot on the menu. Any questions on Aussie? That is number 7. Okay, I guess let's just wrap up dollar crosses. Let's hit dollar yen real quick, and then we'll circle back to gold and SPX. Here's the deal with this thing. It's finally at the initial kind of target that we talked about. 107.47, 107.45. It's a beautiful confluence region of a 618 retracement from the near-term decline off the highs that we made in late July. It's also the longer-term 38.2 of the broader drop from the April highs. So nice symmetry to it, nice overlap, an objective kind of level to look for of resistance. That's kind of the first region I want to see a reaction at. And on the back of this advance, yeah, if we're going to get a pullback again, this would be the first spot to look. Still want to stay constructive on it. You know, the broader trade, in my humble opinion, is to look for a larger peak in dollar yen, either near 107.47 here or near 107.84, which would be a little bit more convincing. It's the 2017 low day close. But aside from it being that, we've seen some decent pivots, accelerations there, and it converges on this beautiful slope. And we don't say that about dollar yen very often. Here's that pitchfork off the objective yearly highs. I mean, you can't make this stuff up. So maybe a little bit higher. Momentum got some room before even snatched 60 there. That, you know, whatever. At the end of the day, 107.47, this is initial resistance. So the near-term opportunity would be near-term from here, actually look for a little bit deeper of a pullback. Weekly open support comes just above that June low at 106.78. Let's just call it 106.80. And then you got that slope there too. Ultimately, one of the other reasons that I want to see that 2017 low day close hit is because it's right on the median line of this near-term formation. So that kind of travels here, a little bit behind schedule. So we'll see. And that, my friends, is dollar yen. Any questions on any other FX crosses? I was looking at this yesterday. I didn't want to bring it up. I don't want to venture into sort of the realm of the crosses just yet. But euro yen, don't see Ty here in the room today. I think this is a trade that he often looks at. The formation has just been radically clean. Another one is very similar to dollar yen. I've had to play with this pitchfork a couple different times to justify what this thing is doing, but on the initial hold here, what we're looking at looks like it closed right at support, gapped and held as resistance real quick before we accelerated right through. So big support. You know, you're on pace for a pretty big rip off the low on building divergence. So if you take that into effect and you kind of look at it from the intraday, here's what it's doing. It's very similar to sort of what Aussie's doing, right? It broke resistance, but didn't really give us the thrust we want to see. So here's a near-term formation. I guess this is kind of almost, this is off the highs from June. Support, like what is that? I don't know. It's divergent on the previous week's price action on this 2-hour chart. So my point being with this is if dollar yen washes out or euro gets that last pull lower, this might be another one where you kind of want to fade a bigger correction and then look for the play. If this low is more significant, which on the daily chart looks like it could be. So just a little note there on euro yen. I don't know. I came across this chart yesterday. Someone was asking about it in the webinar. I didn't get to it. 7, 8. This is 9. 10 is gold. Here's gold as it stands now. Finally getting the breakdown that we've been looking for on all fronts, essentially. Here's what it looks like, or here's what it looked like into the start of the week. Now, quick reminder for anyone who's new to the room here, we always have your weekly and daily charts are never more than one click away. I make sure to do that. I go through a lot of effort to make sure of that. So whenever you don't see those presented, just click on the previous update and you'll see them. Big level and focus, you guys know, is 1526, 1522. Just want to note that this last week was the third or fourth week that price tested and failed to close above that region. Okay, it was a fourth week. Not only that, we posted a massive outside week reversal off the highs. Okay, cool. Momentum is trading at its highest levels since the record highs in 2011. It's the last time momentum was ever at this level on a weekly standpoint. You had long-term slope resistance, you had short-term slope resistance, and you had those swing lows from 2011, 2012. Cool. Everything looked for a reversal. The thing started the week and was just like flirting with a break of upslope support. Here's what it looked like on the 2-hour, right to the start of the week. This is before the Sunday open. So I was like, I don't know what this thing meant. This thing is just annoying. At this point, a break of that slope, we should have seen this thing start to rip or accelerate something, but we didn't really get it. Another test of it as resistance finally held. Here's what it looks like now. Came back, sat there for a little bit, tested its resistance, made our move lower, finally hit that night 1497, 1494 zone, sailed through, and this is where I started to see the acceleration. I was like, all right, maybe this is legit. Here's the first test of it as resistance. If we get through this again, man, it's going to be a little bit of a drifter, I think. You might a little bit higher, might sideways action. Maybe people are waiting for ECB. Maybe, I don't know. I mean, at the end of the day, below this, essentially, you should be looking lower. Next level of interest, 1479. That's the 50%. Very simple range of the advance off the August low. You also have that swing low that you made and that spill that one day at 1480. I guess bearish invalidation. At this point, you kind of want to put the weekly open. That thing gets back beyond the weekly open. It kind of throws a wrench in the whole downside play. Questions on gold? So if you're holding shorts, anything north of 1500, I'd have, well, let me just say this, bearish invalidation for this near-term drop is 1507. So if you can put your stop above there and still be in the money, that's the way to play it real close to the chest. If you're short from anything at that level or below, I mean, a 1499, 1500 tap, I hate putting stops at round figures because I feel like market goes through them and tests them. You're kind of playing it real close to the chest. I get that this is the pivot zone we want to see as resistance, but if you get through that, it'd be very annoyed to get stopped out and then just to retest, because the zone, as you can see, I always look back in the zone and watch what price action has done before. Do we see dribbles below it? Do we see price action sitting there? Is there a strong rejection? Is it a low tolerance area? This is not that, right? We could come back and do this for another, 4 or 5 hours, maybe a day and a half, where we sit here, push lower, maybe push a little higher. So it's an annoying spot, but man, it's been super clean. We can't get much cleaner than this. At least not in gold. Eman says, amazing gold forecast as always. Cheers, Eman. It's not my levels. I'm just helping you find them. It's the market's levels. Okay. So that's gold. I don't even want to touch on silver. I guess there could be some formation at play here. There could be a decent setup, but for me, it's much uglier than gold is. So I will revisit this one at a later date. SPX, Pete, you still in the room? We got both Pete still in the room. Here's SPX, man. Here's that major level of resistance we were talking about. Excuse me. So on its face value, the advance that we saw into the start of the week was simply coming into the median line. This is the same slope. I haven't changed anything. Although we were in consolidation for all those weeks, this is the daily chart, we continue to sit and consolidate just below that 618, the 2018 high day close, and the median line, which was tested upon initial drop into that slope from the lower parallel. So here we are on a closed basis. Haven't really done it yet. So right off the bat, before I even jump into the intraday charts, you're looking at this and you're like, well, hold on a second. You could be just testing slope resistance here. Watch out. In the webinar yesterday, we talked about this, and on Sunday's update, this is the chart that I showed you guys. Before we even opened the session on Sunday, we were saying 100% extension. The objective August open gives us 2978, 2982. We closed there. Okay, we closed there. Now add on top of that you have ascending slope resistance, so uptrend resistance, not only for that level that we looked at on the daily chart, but for also the level, not only for this, right, but also just for the near-term slope. This is a pitchfork right off the lows. There's the upper parallel. There was the median line. You saw rejection, resistance, acceleration, support, resistance, acceleration, support. We opened the week, we pushed right through. We were talking about it in the webinar yesterday saying, man, this thing doesn't look like it has momentum, right? If this is a break of this major pivotal level that we've identified, and certainly it's not just that we've identified it, price told us that last week as we were closing below, couldn't make it any ways above it. It drifted higher yesterday before turning lower. So look, all I want to see is a little bit of a setback. I think, you got the breakout, cool. If it breaks below 2960, that's what I'm looking for in this drop. If it breaks below 2960, then there's something bigger amiss. Okay, then there's something bigger amiss. But in my opinion, right now, you're just kind of looking for that May high tag, 2960. You got slope support there, and you're not even trying to drive into the pivot range down here. Really, it's like the first zone. It's the first zone of support. If this had held, that's kind of the first target we were looking for. Second one from that update was on the confluence region, which was down here. I think I noted a little bit over 2950s or something, I say. 2940s. That's now kind of out of focus, right? The time decay factor. So focus on this first. If we get below this region, the argument can be made that we have a larger correction in play. But even then, it's still off of the confines of the upslope. So don't misunderstand, guys. When we're coming off of upslope resistance, we're just trying to play the pullback. Ultimately, it's a decent position to get long, unless something changes from the technical picture. But as it stands right now, you're still in the broader upslope. You're still in this near-term ascending channel. You're just looking for this drawback to get a little bit deeper. Capiche? Does that make sense, Pete? And that's all that's on my list. He says, yes, cheers, sir. That's all that's on my list. You're more than welcome, Peter. Any other questions or trade setup from you guys? Pete K, different Pete, wants to look at oil. You know what? We haven't talked about it in a while, and that's intentional. And now I'm kicking myself because I didn't check this morning. Here's the breach. And 78.6 retracement actually tagged. That was 58.67. That's impressive. That's impressive. All right, let me take a step back. I'm thinking out loud. Here's what it looks like, Pete. what turned us off to crude was this into last month. This descending channel looked decent. It's kind of like a oxymoron there, but here's the break. Here's the pullback. Didn't get resumption. In fact, we never made it for another tag of the low day close. And then this thing right here, I didn't know what to do with this. This could be the start of something interesting as well. I'm going to take a step back even further. Here's oil on the weekly charts, and that's my problem. This could be a decent near-term breakout. Basic trendline resistance off the yearly high, a basic 618 of the near-term drop from that high you made in July on the weekly chart gives you some pause, right? Gives you some pause. You're at multi-week highs. The next major area of inflection resistance would be the 2018 open again, that's 618 again, which is 60.06 into 60.47. Look, that's the exact spot we called right here when this thing collapsed right back into the yearly low. So this is a strong rebound, no doubt about it. We talked about it. Expect sideways to higher price action, but in fact ended up just being completely lateral. Here's the breach. This is where we need to see failure if we're going to make the leg lower. This opens up, bigger ascent in my humble opinion. Now, the thing that works against that call, or the thing that suggests, well, hold your horses, is this long-term resistance trigger from back here. And you can see in general, momentum is just consolidating into 50. This is getting like ridiculously tight now. So you have no conviction in momentum. And you're looking for that validation that this break is something big. Again, the daily chart, here's that same slope. I need to rework these levels. Let's see what we can do here on the fly real quick. We have some time. Okay. So I don't need to tell you guys, this is massive, 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 massive resistance. Huge inflection point. Man, I can't get, that just keeps, it's still calling basically 60, like 59.74 is the first level. That'd be 100 off the low if it's corrective, just two equal legs. And it converges on the upslope basically into mid-September, like September, the close of this week. Get you some support there. Last swing high in August. Converges on former channel resistance, converges on the median line. Again, this is huge. It's an interesting setup. You're scratching 60 now as the momentum hits or tries to hit the highest levels that we've made so far since the yearly high. It's an interesting setup. There's some arguments to be made right here is where you want to kind of curb your appetite for the long side. I think it's constructive about above 56.86, at least on this immediate thrust, as long as this holds. The big target, the big level you're looking for is 59.74 into 60.45. I think that's sort of everything on this. But those levels I'd be focused on, at least in the near term. Pete, does that help? Pete K. Oh, so it looks like I already had that level mapped out here. Well, let's take a just closer look here. This is null and void, null and void, null and void. And that pitchfork we just added was a modified shift off here. Yeah, it looks pretty decent. And here's this week's open, which is also the opening range lows. Oh, would you know it? It's a 618 extension too off that low. Yeah, it looks like a decent near-term break, but however way you slice it, it's still right at it's still right at near-term resistance. You still want to wait for a pullback. Pete says, "Thanks. Hey, you're more than welcome. Thanks for bringing this up. I should have kept an eye on crude for this breakout. Yeah, we'll track this one. We'll continue to track this one." Aurelian says, "I assume that means Aussie Kiwi." Aurelian, you're asking for aid Kiwi. I think you mean Aussie Kiwi. Someone asked about this yesterday. Was it you? Um, I don't really have a strong opinion, to be quite frank. Uh, Let me just take another look at this. I remember looking at this yesterday and I was like, what? Yeah, I mean, this slope sucks. I hate this. Um, yeah, if you try to shift that, it's just going to go flat. Yeah, even that. It's a tough call on this one. I'm not a big fan, just to be completely frank. It's you kind of trying to bet who's the biggest winner and or loser, depending on which way you try to take this trade. I would assume, again, if you're putting a pistol to my throat and telling me right now, um, he said, yes, me thanks. Yeah, no problem, Aurelian. If you put a pistol to my throat, I would say look higher in the immediate front for another test, and then fade it. But that's with a pistol to my head, which is not how I trade. So yeah, there's just nothing here for me on all the metrics that I look for, at least in the near-term price. Usually, again, I think you would just get a rip high to kind of fake everyone out, and then it would turn. But the levels, the structure, it just isn't there for me. Yeah, I mean, yeah, you have to look for a reaction up here. There's nothing to do it from an objective. Look, if it breaks an objective weekly opening range, that in and of itself, all right, cool. I tack on a quick retracement, look for some structure for the decline, but ultimately that should be bought too. You know what I mean? It would be I would treat it as corrective on the pullbacks. Does that make sense? He says, got it, thanks. You're more than welcome. All right. Well, if there are no other questions, we'll go ahead and wrap it up there. Again, watch out on Thursday morning. We'll be hitting, on our next webinar here, we'll be on ahead of, I believe, the European Central Bank rate decisions at 11:45 here or something like that. So we'll be on board to reassess where the euro is trading, but just keep in mind the major inflection points that we all covered today. Okay, so there's still a little room for the DXY, still a little room for the euro, but we're essentially looking for those pivots to either offer the accelerated move or some sort of kickback for a larger correction. We'll pick things up back on Thursday. Best of luck trading, guys. Cheers.